Hi everyone, welcome back. So this is part 2 of the first chapter of CA Inter Audit syllabus. So today we will be starting off with what is meant by an assurance engagement. So in our previous video, we already saw what is meant by an engagement. So engagement is nothing but an arrangement to do something. So today we will learn what is an assurance engagement. We have the definition here and it's a bit technical, but if you understand this with the help of an example, you will easily remember and understand what it means. Okay, so let's see this with the help of an example. So let's say there is a firm, okay, a proprietorship firm called ABC Traders. Okay, now ABC Traders wants to expand its business for which it needs funds. So it approaches a bank for a loan of 50 lakhs. Okay. So what will the bank do? Bank will not immediately lend the money without doing any verification. Bank will want to know the credit worthiness of ABC Traders, whether they will be able to repay the loan amount. So what will bank do? Bank would want to know about the turnover of the firm, or at least the income of the firm. So let's say in this case, bank wants to know the turnover of ABC Traders in the last 3 years. Okay. Now, instead of taking these records directly from ABC Traders, what can the bank do? Because if it takes directly, what can happen? There could be a risk of misstatement. Bank is not confident that the amount that would be stated by ABC Traders is actually correct. So, to increase the confidence of the bank, okay, to increase its own confidence before making the loan to ABC Traders, what will bank do? Bank may approach you, a CA, for what? For providing assurance. For providing assurance on the turnover of ABC Traders. So what is expected from the CA here? The CA will check the turnover of ABC Traders in the last 3 years. Now, how will the CA check? Through obtaining evidence, okay, and through comparing it with the accounting standards, tax laws, any other applicable rules to check compliance, whether the sales, the turnover was appropriately disclosed and classified and recorded. So once CA does all these checks, it will prepare a report. So the CA will prepare a report which is called assurance report and then submit it to the bank. So what will happen to the bank? Bank will also be happy. Why? Because now with the report, assurance report from the CA, bank has increased confidence and can make an informed decision whether it wants to lend the amount to ABC Traders or does not want to lend the amount. Okay, so what is this? This is nothing but an assurance engagement. Now, why is it different from audit here? It's not necessarily restricted to financial statements, and the main purpose here is to increase confidence of the user. Okay, so the user is what here? The bank. Okay, so now what do you see here? How many parties are there? So there's ABC Traders, okay, then there's the bank, and then there's the CA. So what is an assurance engagement here? How many parties are there? It is having 3 parties. Who are the 3 parties? First, there's a practitioner, okay. Who is the practitioner here? The CA. What is the practitioner doing? The practitioner is the one providing the assurance report. The second party here is responsible party. So who is the responsible party? It is ABC ABC traders. Why do you say responsible party? Because ABC itself is responsible for the turnover it has recorded, for the accuracy of the subject matter, which is the turnover. So the responsible party is the one which is responsible for preparing the subject matter. So in case of a company, who is responsible for preparing financial statements? It's the management, or those charged with governance. Those charged with governance. So those are your responsible parties. And third, who else here? The bank. And we already said, what is bank? It's the user. So we call it intended user. Who is intending to use this information provided by the practitioner? It is the intended user. So there are three parties in an assurance engagement. What do they check? So who checks? The practitioner checks something. That is called subject matter. So in our example, the subject matter here was the turnover. Then third, what is the subject matter checked against? So you check it against appropriate criteria. So here it could be accounting standards, laws, tax rules, etc. Fourth, you will look for evidence. So as a practitioner, the practitioner will look for evidence to support the subject matter. So in this case, the CA was looking for evidence to support the turnover. What could be the evidence in this case? Your invoices, GST returns, okay? So all that is evidence, and the evidence should be sufficient and appropriate. Every time we speak of evidence, remember this: sufficient and appropriate. So sufficient means the quantity of evidence, and appropriateness is the quality of evidence. So we will come to this later when we study the chapter on audit evidence as well, and we've also covered this briefly in our first video already. Now lastly, there will be a written report. Okay, so after all this, what is the final deliverable? It is the assurance report. The assurance report that the practitioner will give to the intended user. It's clear? So this is what an assurance engagement means. Let's see the textbook definition and see if now it makes better sense. Okay. So let's look at the definition. Assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of intended users other than the responsible party about evaluation or measurement of a subject matter against criteria. Okay, so Abhi, you understand all these key terms that we covered with the help of our example. So let's analyze the definition further and see what it means. So here again, what are the elements of an assurance engagement? Three-party relationship that we already saw: practitioner, responsible party, intended users. So we saw all this with example, understood what it means. One important thing here, when we say practitioner, it is not necessarily an auditor. So because assurance engagement can be an audit or even another assurance engagement, depends on what is the subject matter. If it is financial statements, then it's an audit. Otherwise, it could be any other subject matter. Like in our case, it was not an audit of financial statements. Okay, and that is why we use the term practitioner, and it is broader than auditor because audit, like we said earlier, it's related to historical information, whereas a practitioner can provide assurance which is not necessarily related to historical information. Clear? Now next, subject matter. So we already saw what is a subject matter. It is the information that needs to be examined by the practitioner. So in our case, it was the turnover in our example, or in the audit, it would be financial statements. Suitable criteria, which is standards, guidance, laws, regulations against which the subject matter is evaluated. Then sufficient, appropriate evidence. Okay, So the practitioner must obtain sufficient and appropriate evidence about the subject matter on the basis of which conclusions and opinion will be formed. And lastly, after all of this, there is a written report. So this is your final deliverable. So these are the 5 components of an assurance engagement, which we just saw with the help of an example. So now, just for your reference, remember how we saw a real life audit report? We saw audit report of Infosys in our first video. So this is an example of an assurance report. So this is a business responsibility and sustainability report. So this is not an audit report, but still someone has provided this report. It is an assurance report. So this is for Tata Steel. Now if you see the second or third page, you will have the statement of assurance. So Tata Steel has appointed PwC for providing assurance on what subject matter? On BRSR core indicators and other indicators in annual report, integrated report. So this is something to do with ESG and all. It's nothing for you to learn. It's purely for your reference so that you know that, okay, in real world also there are assurance engagements and practitioners are appointed to provide assurance on various matters. Okay. So now let's look at the next topic, which is difference between an audit and a review. Okay. And let's look at this with the help of a real life example. So remember how we saw an audit report? We saw the audit report of Infosys. So now we'll see a real world review report. So this is a review report prepared by the Chartered Accountants for NHPC Limited. Okay, NHPC is a government company and this is a review report prepared for NHPC. So what does it state here? We conducted our review of the statement in accordance with so standards and all, and it states here, a review is substantially less in scope than an audit. Okay, and it does not enable us to obtain assurance that we would become aware of all significant matters that may be identified in an audit. So remember, what did we say? Audit is reasonable assurance. Okay, it's not absolute assurance, it's not 100% guarantee, it is a reasonable assurance. Review is less than audit in terms of assurance. It is more limited in nature. So the assurance here is less than audit. Okay. So even here, if you see, based on our review, what are they stating? Nothing has come to our attention that causes us to believe that this statement is not in line with so and so regulations. So how are they even giving an opinion? Remember in audit how clearly and confidently the auditor stated, hi, we have audited the financial statements and we have a reason to believe that we have a reasonable assurance that the financial statements have a true and fair view. So we are stating there. Here in review we are saying we have no reason to believe that it is incorrect. So you're not going to do a detailed check here. You're going to check the evidences, but it is not a thorough check like an audit. It is not a reasonable assurance. It's a relatively lower level of assurance, and that is why it will reflect in the way the opinion is given as well. And that is why it's a review report. Now let's go back and see what the definition is. What is the material tell us? Okay. So here, audit is a reasonable assurance engagement. Okay. But review is a limited assurance engagement. So we already saw this with the help of an example. It provides a lower level of assurance than audit. So the CAs themselves have written in the review report, this is lesser than audit. The assurance is not as much as an audit. And review involves fewer procedures. However, both audit and review are related to financial statements on the basis of historical financial information. Okay. So audit and review both related to historical information. Okay. Now, types of assurance engagements. Okay, let's move on. What are the different types? Okay, for this, let's move on further and see the flowchart given here. So we saw what is an assurance engagement. We saw the components of an assurance engagement, right? Now, we have different types of assurance engagement. So there's reasonable assurance. So we always have been saying since our first video, audit gives a reasonable assurance, not an absolute assurance, reasonable assurance. Now we just saw review gives a limited assurance. Now there are other assurance engagements which deal with matters other than historical information. Why? Because we said both audit and review deal with financial information which is historic, right? Historic. So there are other types of assurance engagements like examination of prospective information, okay, forecasts, assurance regarding controls. So that is not related to financial information, like how we saw the RSR report Tata Steel. So those are different types of assurance engagements. So if I go back to the material here, okay, this is again summarized. What we saw is a summarized version. This is more in detail. Okay, so again here it's telling you that an assurance can also be in relation to prospective financial information or in relation to internal controls. Okay, prospective is future information, events that may occur in the future, like forecasts, projections, or both. Or and also they've given a difference between historic information and prospective financial information. And if you see this table, so they've given differences between reasonable and limited assurance. So reasonable assurance is high level, whereas limited assurance lower level of assurance than a reasonable assurance. So the performance of procedures, elaborate and extensive procedures to obtain evidence. Fewer procedures compared to a reasonable assurance engagement. It's not saying that we will not perform procedures at all. We will still perform procedures, but fewer than what we would do in a reasonable assurance engagement. So it draws reasonable conclusions on the basis of evidence. Here also you are going to obtain sufficient appropriate evidence to draw limited conclusions. The example of a reasonable assurance engagement is an audit and a limited assurance engagement is a review. And that is what we saw in the flowchart here. Correct? Reasonable assurance is audit, limited assurance is review. Okay? So again, the same thing is explained here. So audit of financial statements, it's a reasonable assurance engagement, whereas review, it's a limited assurance. And then you have assurance which looks into financial information with future, prospective financial information or internal controls related assurance. So with that we cover the different types of assurance engagements. So now we have test your understanding, fifth one. So what does it say? The management of Exotic Tours and Travels Limited requests its auditor Raja & Co. to provide an assurance report on the financial information for first quarter of a year by skipping required detailed procedures. Can Raja & Co. provide such a report? What would be the nature of such a report? And would it be necessary for them to obtain sufficient appropriate evidence? So what are they asking for? Assurance report. So the question itself tells you it's an assurance report and only for first quarter. So it's limited assurance. So what is limited assurance then? It's a nature of review report then. Okay, so this is a review report with limited assurance. Would it still be necessary for them to obtain sufficient appropriate evidence? Yes. Irrespective of whether it is an audit or a review, the auditor will still have to obtain sufficient and appropriate evidence. Okay, so that's the answer for this question. So next topic in the material is qualities of auditor. Now this is not very important for the exams and it is very easy and obvious, so I'm not going to spend time on this. Let's move on to the next topic, which is standards of auditing, engagement quality standards, and so on. So, you remember we first covered the first standard of our syllabus in the last video, which was SA 200, Standard on Auditing, number SA 200, and that was about overall objectives of independent auditor, right? So now we will see why are standards on auditing needed. So if you move on further, page 1.31, item 15.6, why are standards needed? They will help to ensure audit against established benchmarks at par with global practices. So India will not be behind whatever is followed globally. Our standards issued by ICAI are also at par with global standards on auditing. Okay. Next, standards improve the quality of financial reporting. Okay, isn't that very important for facilitating good decision making? Then standards promote uniformity. Okay, so everyone, all the CAs will have a uniform guidance as to how to audit the financial statements, and they equip the professional accountants with knowledge and ensure audit quality. Okay, so now we have different types of standards. So let us look at it. So let me show you what we have. So see here. Now this is like a hierarchy chart where I have classified the standards into different types. So we have standards on auditing, on review engagements, assurance engagements, related services, and quality control. Okay, so each of these has a different prefix. So standards on auditing, SA, SA 200, SA 230, so on. Then standard on review engagements, SRE. So what are these? So we already saw what is an audit. We saw what is a review. So these standards are applicable for auditing. These are applicable for review engagements. And both auditing and review engagements are for past historical financial information. Then you have standards on assurance engagements. Now assurance engagements here could be engagements for providing assurance on prospective financial information, okay, other than historical information. So we have separate standards for those. Then you have standards on related services and quality control. So now let's go back and see what is the meaning. So if you see here, the material also tells you standards on auditing are those which apply in audit of historical information. So there are a lot of standards here, and we will be covering these as we move ahead in our syllabus. Then you have standards on review engagements. Again, review is providing a lower assurance than that of an audit, so you have standards on review engagements. Next, standards on assurance engagements. So assurance engagements which do not include audit or review, okay, do not include audit or review of historical financial information. So if you see here, SAE 3400, examination of prospective financial information, SA 3420 for prospectus. So this is all assurance with regards to prospective financial information, and hence you have separate standards governing those. Then you have standards on related services. What are related services? So remember how we said an auditor is an independent person who will be examining the financial statements. Well, sometimes an entity may engage a practitioner to assist the management with preparation and presentation of financial information without obtaining assurance. So in this case, this is different from audit. Here, you're not even obtaining assurance. Rather, you are engaging a CA or a practitioner to assist the management either for performing certain procedures or to assist with preparation of financial statements. So in that case, this kind of service is called related services. So it is not an audit, it's not assurance, it's not review, it's a related service. So for these also there are certain standards, And the key point is there's no opinion here. So these are just related services. So you have separate standards here, SRS 4400 and so on. So again, these are for related services. Okay. Then lastly, you have standards on quality control. Okay. So auditors will independently perform audit of financial statements, but they also need to have a check. They also need to adhere to certain quality standards, right? So standard on quality control is to ensure that the auditors also adhere to a system of quality control. Okay, so auditors, practitioners will establish a system of quality control so that the firm and its personnel comply with professional standards. So basically, when the auditors also issue audit reports, that should be also of high quality, appropriate quality. Okay, for that we have separate standard on quality control, and these standards of quality control are to be applied for all services covered by engagement standards. So all services will be required to be adhering to this standard. Clear? So we've already covered standards. So this is just an overview of the different types of standards. We will see each standard in detail as we move ahead in the syllabus. Okay. So now we have another question here, test your understanding, number 6. Okay. Before that, one brief point that I would like to mention. Okay. So what are auditors' duties in relation to engagement in quality control standards? So naturally, all auditors, all practitioners have to comply with these standards. Okay. But there may be a situation when a specific procedure is required in the standards would be ineffective. In this case, what should the auditor do? The auditor is required to document how the alternative procedures performed achieve the purpose of the required procedure. Also, reason for departure has to be documented unless clear. Further, his report should draw attention to such departures. Okay. So what does this mean? Okay. Now this same thing you will see in test your understanding. That's why I covered this together. So let's see the question under test your understanding. Okay. CA Babu is conducting audit of financial statements of Quick Buy Private Limited. He was not able to obtain external confirmation from certain debtors due to practical difficulties. However, such a procedure is mandated for one of the standards of auditing. So, unable to obtain external confirmation from these debtors, he relied upon sales details to these parties, e-invoices, e-way bills, and also traced payments from these parties in the bank accounts. He was reasonably satisfied with the audit evidence obtained. Is there any reporting duty cast upon him relating to not following a mandated procedure in one standard on auditing? Okay, so what did we see earlier? The auditor has to comply with all standards on auditing and standards on engagements and quality control. So if the auditor fails to comply because there's a situation where a procedure required by a SA is not being followed, what is that? So one of the essays says that you need to obtain external confirmation from debtors. What does that mean? If in your balance sheet, okay, if Quick Buy's balance sheet has debtor balance of 5 lakhs, then CA Babu should reach out to the debtor and confirm if that is correct. So the debtor should say, yes, that is correct. I owe 5 lakhs to Quick Buy. So that is an external confirmation. But that is not always possible. Okay, maybe the debtor is not responding or is not reachable. Okay. So what does CA Babu do? So he's not able to follow an required audit procedure. So they followed alternative procedures. So he looked at invoices, looked at e-way bills, looked at the payments, and then traced them to the bank accounts. So didn't he do sufficient work to reach to the conclusion whether this 5 lakhs is accurate, appropriate? So after all of that, now the CA is reasonably satisfied with the audit evidence. So what is the duty here? So if you have not complied with the procedure required by the essay, then you need to state what are the alternative procedures. So CA P. Babu needs to state the alternative procedures that were followed, which is tracing the payments, checking invoices, e-way bills, okay? And state why there was a departure from the original procedure which required obtaining external confirmation. So that is the duty. So need to state the alternative procedures and why there was a departure from the procedure which was mandated by the standard on auditing. Clear? Now let's move on to the next case study. So let's go through this one. Me&U Private Limited has been newly incorporated. Plant of the company has recently started production with the help of funds provided by a bank for purchase and installation of machinery. Further, the company is also utilizing working capital credit facilities from the same bank for meeting its day-to-day working capital requirements. However, just within 6 months of its operations, management feels that working capital funds are inadequate and situation is creating liquidity issues in the company. So, management of the company has approached its bankers and requested for enhancement in working capital credit facility. Bank managers insisting upon financial statements of the company for half year along with report, providing assurance in this respect duly signed by chartered accountant as audit is far away. It also requires projected financial statements for coming years along with a report from the CA providing assurance regarding these projections to consider request of management. Okay. The management approaches CAP, who has qualified recently and started practicing. Reports providing assurance for half-yearly results and projected financial statements are sought from CAP. Management provides necessary information and records to him. As in above case, company only provides trial balance, financial statements in draft preliminary form along with accompanying records for the relevant half year to CAP and requests him to provide duly signed financial statements with a report for mutually agreed professional fees. Okay, so what is happening here? There is a company, okay, company Me&U, and this has been in operation only for 6 months. And just within 6 months, it has a working capital crisis. So it has approached the bank for working capital loan. Okay. So what is bank asking? Bank is asking for assurance from a chartered accountant. Why? Because audited financial statements are not available. So the bank wants an assurance from the CA. So it wants financial statements for half year along with the report and along with projected financial statements from coming years. So what does the company do? The company has appointed a chartered accountant and the company has given only trial balance financial statements and asked the chartered accountant to provide duly signed financial statements along with a report. Okay. So now this is a tricky one, and if you are not clear on the concept of assurance engagement that we've seen so far, you will not be able to solve this. So let's take it step by step. So let's answer the questions and see our understanding. The management of company has engaged CAP to issue a duly signed report for half year as referred to in last para of case study. So yeah, here what we saw. Which of the following standards, if any, issued by ICAI are relevant for CA? Standards on review engagements, auditing, related services, or no standards? So what has happened here? We already know company is only operational for 6 months. It has no audited financial statements. Okay. Now, if a chartered accountant has been appointed and he's asked to provide signed financial statements, he's not been asked to audit, he's asked to provide signed financial statements. So in effect, he's assisting in compiling the financial statements for a 6-month period. And if you see the kind of evidence provided, this is not sufficient appropriate evidence, trial balance, financial statements. This is just limited information provided. So it's more of a limited assurance, okay? And it is not an audit. So definitely it will not be standard on auditing, okay? It cannot be review engagements either because there's no sufficient appropriate audit evidence. So it consists of standard on related services here, because what is happening, the chartered accountant is assisting in preparing the financial statements here by issuing the signed financial statements and preparing a report. So it's compiling these financials and giving the report. So that is why it's a agreed upon procedure. So it's not an audit, it's a related service. So standards on related services is the correct answer. Now, which of the following statements is most appropriate in the given situation? CAP can assist management in preparation of financial statements. However, issue of report in such a case is outside the scope of the work. CAP can assist management in preparation of financial statements of the company and can issue an audit report. CAP can assist management in preparation of financial statements and he can issue a compilation report in this respect. Okay. What's the next option? Responsibility of preparation of financial statement is of company's management. CAP cannot assist management in preparation of financial statements of the company. However, he can issue a review report. Okay, so let's take this point. Typically, what happens in an audit or in general in a company, the management is responsible for preparation of financial statements, correct? And the practitioner will either perform an audit or a review. But in this case, CAP has been engaged for the purpose of assisting in the preparation of financial statements for 6 months. So this is not a review engagement. So why will he issue a review report? He cannot issue a review report. So this is not the right answer. Now, what were the earlier options? So if you see point B also, CAP can assist management and can issue an audit report. This can never happen. Auditor is always independent. So if an auditor is assisting in preparation of financial statements, he is not independent. There's conflict of interest. So this is never possible. So this is also not true. So now between point A and point C, so if you see point A, it says CA can assist management in preparation of financial statements. However, issue of report in such case is outside the scope of the work. So if you look at the last paragraph, what are they saying? They want the CA to provide duly signed financial statements with a report. So he has to prepare a report. And like we said earlier, what kind of report it can be? A compilation report. It's not an audit report, not a review report. It's just compiled financial statements, compilation report. So point A is also incorrect. Instead, point C, which is CAP can assist management in preparation of financial statements and can issue a compilation report in this respect. So this one is the correct answer. Okay. In the above said scenario for issuance of financial statements for half year, identify the most appropriate statement. Standard on quality is not applicable because CAP cannot issue an audit report, cannot applicable because cannot issue review report, not applicable as CAP is barred from issuing any report, or it is applicable in such type of engagement. So we've already seen standards on quality control are applicable to all engagements, be it audit, review or related services. This is related services, so standard on quality control will apply even in this engagement. Now fourth, the bank of the company has also requested for projected financial statements for coming years along with a report for CA regarding these projections to consider the request of management. Which of the following standards will be relevant then? So standards on review engagements, no standards, standards on related services or assurance engagements. So what did we see earlier? Review and audit standards always contain, so are always for historic information. Okay. So now it is for projections, for future information, prospective financial information. So which standard it will be? Standard on assurance engagements. So point D. This is correct. Now suppose CAP also accepts work of issuing projected financial statements with a report to be signed by him. The management has projected turnover of 100 crores, 150 crores, 200 crores for the following years as compared to the present turnover of 25 crores. Identify the most appropriate statement. First, CAP has to satisfy himself regarding arithmetical accuracy. CAP has to satisfy himself regarding reasonableness of assumptions, underlying projected turnover and its consistency with actuals. CAP has to satisfy himself regarding arithmetical accuracy, or CAP has to satisfy himself regarding assumptions, underlying projected turnover, consistency with actuals, disclosure and presentation. So naturally, as you can also see in the answers, it will be point D. Why? Because as a chartered accountant, he will be checking not just the assumptions or arithmetical accuracy, but also will be concerned with the consistency with actuals, disclosure and presentation. Why? Because we saw yesterday also, right? Unless there is a proper amount, proper classification, disclosure, presentation, there could be a material misstatement, and we don't want that. So that is why, as a practitioner, the CA will also check these aspects, and hence this point is correct. Okay. So now you have the summary, so you can go through, and once you have completed your revision, completed the summary, then you also have multiple choice questions. So you can solve these on your own. It would be a good exercise for you to test the understanding of the concepts and see how you are able to answer. Okay. And if you have any questions with regards to the MCQs, or if you have any doubts, then you can leave them in the comments, and if you want anything else to be covered in detail, then please let me know in the comments. Okay, thank you.